Hey, did you guys manage to catch those tech earnings last night? We just proved we are in the greatest economic expansion since the Industrial Revolution. I was not expecting iPhone sales to be as good as they were. Google, oh my God, guys, I had to go ahead and I picked up some more this morning. I want to highlight some of my favorite facts about some of these earnings, some stuff that you might not have paid attention to. So just checking this out, let's start by talking about the Google shares that I bought today. I held off before earnings. Huge mistake here, folks, because many of you know I started my Google position. I was buying it around the $2,400 range. I picked up 2 shares, and then going into today, guys, those shares were sitting at about $2,700, and I bought them, and we're still trading up a little bit today, which is just absolutely phenomenal. Checking out the actual price, it's kind of wild to think that one of these massive companies like Google is able to trade up 58% this year. In our chat group, we were like ironically joking that why are we even doing research on other companies? Why are we even trying to do all the hard homework on small caps that we think can grow when the large caps are just doing all the heavy lifting for everyone these days? So just taking a look at Google, some stuff that I found really interesting about this company. The revenue is unbelievable, right? Like the change in revenue year over year was up 62%. I didn't think that was going to continue the way it did because basically Google's been the front end leader leading into this earnings against everything else, except we haven't got Facebook yet. Facebook's coming out tonight. By the time you watch this video, Facebook earnings will likely already be released. But just take a look at their ad segments of income, because I thought YouTube made up like a huge percentage of their income, but it's really not. The primary platform for Google search and other is their largest income provider, going from 21 billion to 35 billion from this time last year, with YouTube increasing still huge, going from 3.8 billion to 7 billion. And then I don't know what the Google network makes up, but that was another huge driver and actually is doing more revenue for them still than YouTube is. So I didn't realize like that Google is well more diversified away from that. And I was joking too, because when it comes to these blatant earnings, you're not getting enough information. You actually have to listen to these earnings calls, because you wouldn't even know Google is doing quantum computing. The fact that Waymo has already done like over 10,000 self-driven pickups. Like you can go into California right now and hail a self-driving car with no driver thanks to Waymo. People aren't even aware self-driving is that far ahead right now. So there's so much going on with this company that I think is just absolutely incredible. But just taking a look at the total revenues, guys, going from 38 billion to 61 billion, just that 62% increase boggles my mind. So what about Apple? You know, Apple was one that I was really on edge for, because many of us were predicting that, you know, coming out of this pandemic, the economy is opening up. People already stocked on their phones and their laptops. Why do we need more of those now? I mean, we're waiting for the new renditions to come out into the fall season so we can pick it up for Christmas. This should be a slow season. And I mean, Apple's lagging behind, only trading up 12.23%. But to the awe-inspiring conglomeracy of the largest company in the world, did not disappoint. And I've said this time and time again, every time I've ever thought ill will of Apple, or I watch anyone predict that Apple's going to do bad, wrong every time for the last 5-6 years that I've owned this company. I mean, almost up 1,000% right now on Apple. But just taking a look, guys, I mean, look at the product increases here. Like absolutely for the 9-month end, guys, going from 170 billion to 232 billion for the 9-month end. Unbelievable. But just take a look at these iPhone sales. Like, oh my God, going from 26 billion from the last quarter to this time this year at 39.5 billion. Their total iPhone sales are now at 153 billion for the 6-month end, against 111 billion from this time last year. I guess iPhone has not reached its max capacity yet. It hasn't saturated the total market that it is growing into. I mean, Steve Jobs started a legendary trajectory for this company. I mean, just take a look. Every segment saw growth. Macs, iPads, wearables. Service saw a massive jump, which I was really happy with, because the service sector for them, after just going through the court case, you know, because they're charging 30% on every app sold through the App Store, people think that's a bit monopolistic. However, you know, the government overlooked that. You know, we still have a lot of big shows, the streaming services coming out for Apple, and it is really showing that this company is growing on every aspect of their business. But just like Google and these other companies, there's so much going on behind the scenes. I feel like Apple has like a Batman cave where they're just coming up with the most crazy tech right now, and they're not even letting us know. So it's another good reason to own these companies. Because again, the cash position these companies have stacked up, I mean, just everything about them right now. So what about Microsoft? This is another favorite of mine that released earnings the other night, guys. And this one was probably the lackluster of all of them, considering it trades for the highest multiple right now, almost sitting at a 40 PE. It's at a premium, and I was surprised it didn't pull back a little bit more because the increase on revenue here was 21%, but the total operating income was up 42%, which again, nothing to gawk at. I mean, these numbers are crazy at this scale. I just really would have thought for the premium compared to like, the growth on say Google, we would have seen maybe a pullback from the 40 PE, because like I said, that's kind of expensive. But one of the most fascinating things about Microsoft for me here, guys, if I scroll down, because I did highlight it in here, is that when I was looking at the best growth segments for them, I was kind of shocked to see that Xbox, so just taking a look at Xbox content and services, actually didn't increase that much. We were only seeing about a 7% increase. But check this out, LinkedIn Marketing Solutions. So LinkedIn, something that I don't primarily use a lot, but that is actually the largest growing segment percentage-wise, because it has grown by 91% on their revenues, which is pretty incredible, because just taking a look at Azure here is growing by 45%, basically being one of their second largest segments, while they're also seeing search advertising, including traffic acquisition costs, saw a 49% increase. So we can see that across all of these companies, guys, when it comes to margin and growth, it's definitely on the social media side of it, which is just really shining for things like Google, and I'm very much expecting for Facebook on this evening's earnings. So again, really shocked that Xbox didn't see growth, but nice to see that, the diversification that Microsoft holds is still growing on every segment. Again, not by the growth that I'd like to see, but still for the ones that matter, again, with cloud computing, absolutely stellar. So putting all of that aside, guys, this is bar none really just proving that if you are sitting on your hands in this market and you are not recognizing that you are truly in one of the greatest growth cycles in economic history, and I can't state that enough. I really just don't feel like people understand what we are going through, and I'm really curious to when we actually get to the point where people stop saying the average rate of return from the market, because the benchmark that everyone compares that to is the S&P 500, and that has been growing by over 20% a year for the last 10 years. The safest investment you could possibly make in the market, the benchmark every investor, advisor, and fund manager compares themselves to, has been drastically outperforming the average rate of return of 8%. We're used to saying the average return is 8%, but now it has realistically been 20%. And I feel like so many people just need to understand this, guys. This is not a time to sit on your hands. I still think we're not at the end of this. I don't know how long this economic growth cycle is going to last, but even if you get another few years out of it, your rate of return is going to be insane. So don't sit on your hands. Don't miss these opportunities, especially if you are young and you're just starting to invest, because we're going to reach a point where things could very likely level off, and you're not going to be able to tell your grandkids that you took advantage of the greatest growth cycle in economic history. So in light of all this, let me know what you think about these earnings in that comment section below. Stay cool, stay awesome, guys, and I'll catch you tomorrow.